Welcome to Gracefully Greying. I am your host, Attorney Henry Gornbein. Today on Gracefully Greying, as we are in the heart of tax season, I am pleased to welcome as my guest Attorney Stephen Weisberg, who will be leading us in a discussion of how to handle tax indebtedness. Welcome, Stephen.
Thank you. Glad to be here.
It's my pleasure having you. First of all, why don't you tell us about your background and areas of expertise?
Yeah, so real quickly, I actually started out in corporate bankruptcy, and I was doing that in 2008 when all all hell was breaking loose. Basically, the auto industry was going under, and bottom line is we were representing fairly large suppliers, and always GM, General Motors, Chrysler, and Ford were getting paid in full. And there was a bunch of mom and pop suppliers or just, small businesses that were not getting paid anything. They were getting paid pennies on the dollar. And I just realized I didn't want to do what I was doing. I didn't want to just be helping Ford, Chrysler, and GM, even though they're great for the economy here in Michigan and for the country. I wanted to see, the looks on people's faces, the small mom and pop stores and the small businesses that I was really helping. And so ultimately, to make a long story short, I found a way to do that. And that was to help people with tax issues, small businesses, individuals, S-corps, self-employed people. And so my expertise is in tax debt. It's in improper tax assessments, really any sort of IRS controversy where we're fighting with the IRS over something that they think that you either did or they are telling you that you owe, that you disagree with, or if you owe and you don't have the means to pay what they are saying that you need to pay, there are certain resolutions out there that are available for you.
Plenty of people need your help. First of all, Stephen, why don't you explain what tax debt is and how it typically arises for individuals and businesses?
Sure. So for individuals, if you're a W-2 worker where you get a paycheck, really the only way for you to get tax debt, I guess a couple ways. One is if you're not taking out enough taxes from your paycheck, you're not getting enough of the federal withholdings taken out, but also maybe you take money out of a retirement account and you don't pay taxes on it, something of that nature. So it happens, but not as often as when you're self-employed, which is when you have a small business and you have to make quarterly payments to the IRS because you're not getting a paycheck, and you're not getting the taxes taken out from your paycheck, on its own automatically. So you have to make these quarterly payments, and if you don't, then you end up at the end of the year in April 15th saying, oops, I don't have the money, and then you're in trouble. There's also payroll tax issues for businesses and business income tax issues, but a lot of payroll tax issues where business owners take money out of the employees' paychecks like they're supposed to, but they're supposed to deposit it with the IRS. Sometimes they don't do that. They have vendors that need to pay. The vendors might say, hey, we're not going to give you any product or services unless you pay us. And if cash flow is low, the business owner, kind of surprisingly, but it happens, will take money out of that they took from the employee's check and they'll give it to the vendors. But in terms of individuals, a lot of it has to do with taking money out of retirement accounts. So that's a big one.
Stephen, what are some misconceptions that people have about tax debt or dealing with the Internal Revenue Service?
Yeah, one misconception that I always touch on because it bothers me is you'll hear these commercials on TV or late night or commercials that are on the radio a lot too, where they say, hey, I'm not going to name any names, but big tax companies say, hey, call us up. You're going to pay 10% of what you owe. We resolved this one case that was $100,000 owed. We resolved it for $500. So everyone gets really excited, right? They hear that and they're like, oh, I owe $20,000. I only want to pay $2,000 or what it is. Then they call up these companies and the companies basically say, here, hand me over $10,000. We'll figure it out. They don't know anything about your case. They don't figure it out. And then they're basically saying we can file an offering compromise for you. And that's kind of the big buzzword, offering compromise. The offering compromise is what they're talking about, where you're resolving your tax debt for some portion of what you owe, but not the entire amount. And It is true. It's a real thing, but most people don't qualify for it. And because all these big companies say that you're going to qualify and you're going to pay only a portion of what you owe, the acceptance rate for offer and compromise is about 40%. There's these bad actors out there. They send out, they tell people they can do things they can't do. And the IRS never accepts, or accepts very few of the offer and compromises that they sell or they send in. On the other hand, I have probably a 98% success rate with offer and compromise because I only sell an offer and compromise to someone who it actually makes sense for, who qualifies for it. And it's terrible what these companies are doing where they're just reeling people in and telling them too good to be true stories. So that's the biggest misconception. Not everything is going to be resolved for 10 cents on the dollar just because you hear it on the radio. So you need to be really careful. And that's something near and dear to my heart because I worry about the American taxpayer getting really duped by these companies.
What are the consequences of ignoring tax debt?
Yeah, well, so there's big consequences because the IRS is really the strongest and most powerful collection agency in the country, maybe even in the world. I mean, that's the reality of it. They have more power than any other creditor that you be working with. The consequences of not paying your taxes ultimately is wage garnishment, where they're going to take money from your from your wages, from your pay stub, or they're going to take money right out of your bank account. They'll take the whole thing without thinking about it. Now, there are certain notices that go out. The IRS has to send at least 3 notices to you about your tax debt and the tax debt that you owe. But once they do that, they're able to garnish your wages. They're able to take money out of your bank accounts. In extreme situations, they're able to seize your home and to seize personal assets. Now, that doesn't happen all the time, but it does happen. The big ones are them taking your money from the money you earned from your paycheck and from right out of your bank account. And it's a big deal. It hurts people financially big time.
Stephen, you mentioned notices, and there are so many scams out there. Isn't it true that all notices from the IRS are written by mail? And if you got something by email, it might be a scam?
Yes, definitely. The IRS will only contact you by mail unless you have a revenue officer assigned. They may contact you by phone. But if that's the case, you need to ask them for their badge number. You need to have them send something out to you so you can see what they're talking about. But yes, the IRS will only contact you by mail. They're not going to email. Certainly not going to email you. They're not going to call you. They're going to send it by mail. Now the problem is there are a bunch of bad actor companies that will send notices by mail, almost pretending that they're the IRS. And just wanting you to call them to ask for their help so that they can sell you something. So you have to be careful there. You always want to ask for someone's badge number, or identification number. You want to make sure you know who you're talking to. Make sure you ask them if they work for the IRS, what their badge number is, what this is about. Get something in writing before you do anything, because there are frauds out there.
Stephen, what are some of the most effective strategies for dealing with and reducing your tax debts?
Sure. I talked about the offer and compromise, and that's where you only pay a portion of what you owe. And that is an option. Like I said, most people don't qualify, but it is an option. I've reduced, $500,000 debts to $500. And that's the reality. But most people don't qualify. It sounds great in an ad for to say that I've done that, but I don't advertise that because that's not what most people get. There are plenty of other resolution options out there aside from the offer and compromise. There are installment agreements, which are monthly payment plans, but there's also different kinds of monthly payment plans. And the type of payment plan that you get is going to be going to change things for you significantly based on whatever it is. There's what's called partial pay installment agreements, where you'll pay the IRS something monthly, but you'll never end up paying off the total amount of your debt because the IRS only has 10 years to collect from you. So for instance, if you have $100,000 debt, just as an example, and you're only paying $100 a month, you'll never pay off that debt by the end of the statute of limitations, which is that 10 years. So whatever's left over will just drop off. So that's a big difference compared to just a regular installment agreement. There's also, installment agreements that have to be paid in 72 months. There's installment agreements where you don't have 72 months, so you might need to provide financials. There's other installment agreements where it's all based on financials and about what you can what you can pay, which leads me to currently non-collectible status, which is a big one, which is if your income or your expenses outweigh your income, and you really can't pay the IRS anything on a monthly basis, and you don't have any big assets, you can get a currently non-collectible status where it'll stop any sort of enforcement from the IRS. You won't have your wages levied, garnished. You won't have your bank accounts levied, and you won't have to pay the IRS anything. You still owe the tax, but again, it falls off after 10 years. So you could theoretically stay in that currently non-collectible status for 10 years and never pay anything. Now it is, it's not set in stone. You can't stay in that. You don't always stay in that currently non-collectible status forever, but it certainly gives you temporary relief, and it may give you full relief.
Now, you talked a little earlier about offers in compromise, and you said, a lot of people aren't eligible. What constitutes eligibility?
Yeah, so it's a formula that the IRS uses, and the formula is kind of easy to describe, but it's much more intricate and much more complex when you really get down to the details. But the formula, for all intents and purposes, are, they look at your income, they look at your expenses, and they look at equity you have in assets. So what they're going to do is they're going to look at how much monthly disposable income you have, and that's based on your income and expenses. Now, they only allow certain expenses. If you have a $1 million house and have, I'm just making up numbers, a $5,000 mortgage, that's not something they'll accept. They'll say, sorry, I understand your mortgage is that high, but we're not going to allow that for purposes of our discussion or determination when it comes to offering compromise. They also look at your monthly disposable income, and they decide if can this person pay it over the 10 years that we have to collect from them. If they can, they won't accept an offer at all. But again, bottom line is the simple formula for an offer in compromise is monthly disposable income multiplied by 12 plus any equity and assets that you have.
I'm curious. Let's say the breadwinner is the husband and he's the one who owes the tax debt. Does marriage shield anything?
That's a good question. And I have a lot of really nice relationships in the family law realm with family law attorneys because, obviously, when there's tax debt and there is there's an issue where there's a tax debt for family law in a divorce, they can make arrangements where let's say the husband is supposed to pay off the tax debt and the wife is not supposed to based on the divorce decree. But when it comes to the IRS doesn't care about what the state court said. They believe if it's a joint balance, they believe that you're both, liable, jointly and severably liable. So they're going to come after both spouses, even though, the divorce decree might say something different. So that ultimately might have to be dealt with in state court if, let's say, the husband was supposed to be paying it and he doesn't pay it. The wife may have to bring him back into, family court to make him pay that. In general, in terms of husband and wives, they're both jointly and severably liable, meaning they both owe the entire amount. So the IRS can collect from both of them. There are instances where the wife might believe, hey, my husband didn't report all of his income. The IRS now came back and said he had extra income that I didn't know about, and now we have a big tax debt. And there's something called innocent spouse relief, where the spouse who believes he or she is innocent and didn't know anything about this extra income can tell the IRS, hey, look, I didn't know anything about this. This is all on my husband or wife. He or she controls the finances. They make the money. And I didn't know anything about it. So I shouldn't be on the hook for that balance owed. And there's certain criteria you have to meet for that.
A strategy, speaking as a family law attorney, often what you can do is craft a divorce judgment where if the husband's to be responsible for any back taxes and he fails to do so, you can have a clause in the divorce judgment where the wife can come after the husband if the IRS comes after her. So there are some remedies that can be used, especially even though the IRS is no longer involved, you can still do things through family courts and through state courts.
Yep, exactly.
Stephen, what are some other lesser known programs or options for people to be aware of with regard to tax debt problems?
I think that you want to know about the main solutions or resolutions that are available. There is penalty abatement. A really good one is a first time penalty abatement. So if you owe, let's say for 2024, you filed in 2025 and you never had a tax issue previously, you might be eligible for a first time penalty abatement where they'll say, okay, you haven't owed anything for the last 3 years. You filed all your taxes properly and on time for the last 3 years. We're going to get rid of the penalties. And that's a big deal because penalties can be, there's a failure to file penalty and a failure to pay penalty. The failure to file and the failure to pay penalty can both reach up to 25% of the total amount that you owe. Meaning, if you get the full penalties for failure to file and failure to pay, you could be owing up to 50% of what you owe, 50% more of what you owe. So penalty abatement's a big one. Other than that, it's you want to go through the resolutions and find out which ones work best for you. We talked about innocent spouse relief. That's one. But the different types of installment agreements are really important. Currently non-collectible is really important. And offering compromise when it works is really important.
What steps can be taken by someone to avoid accumulating tax debt?
Yeah, so that's a good question as well, because some people continue to owe year after year. And if let's say I got you into a resolution 1 year and you owe the next year, that resolution is going to be thrown out and you're going to have to start all over. If you're not taking enough taxes out of your paycheck, you're not having enough deductions, you've got to change that. And sadly, some people I work with, they just never change it because they think, well, I can't change it because I don't have enough money for my everyday bills. If I change it and more is taken out of my check. Problem is, then you're going to owe the IRS. And if you can't pay the IRS at the end of the day, you're going to be back where you started and you're going to need a new resolution of your underlying debts. So again, if you're a W-2 and you have a paycheck, you need to change the deductions. If you're self-employed and you make money, on your own and you're not paying you're not paying taxes from a paycheck, and you're just having to make quarterly payments. The only thing I can say is you've just got to make your quarterly payments. And some people don't like to hear that because they think they need extra money for this and that. But I would make it as automatic as possible. You want to, whenever you bring money in, you make money, you want to put, I'm just making up numbers, but let's just say a third of it into a separate account in your bank that is for taxes, and then automatically have that money sent over to the IRS every quarter. So at the end of the year, you don't have to worry about it. You don't have to think, I didn't pay enough during the year. I'm going to owe, and now I can't pay it because I don't have enough. You need to make it as automatic as possible. And that's why people with paychecks, they don't have as many tax issues because it's automatic with them. That money comes straight out of their paycheck and, they don't think about it. They just know that their check is much lighter when they get it, but it comes right out. When you're self-employed, that doesn't happen. So you want to try to make it as automatic as possible. When you get money in, set some aside into a different account for taxes.
So in essence, pay now to avoid paying later, or more pain later, so to speak.
Yeah, exactly.
Stephen, what advice would you give to someone who is being audited?
When you're audited, you've got the IRS. It was a couple different audits, but they're mostly doing correspondence audits. We'll send a letter to you and says, hey, we think you owe X amount, and you only filed and showed Y amount. So you need to be on top of that. you'll get the correspondence and you need to respond timely. If you let it go, it'll spiral and they'll put out a final determination about how much you owe. So you need to respond to those letters. And a lot of people kind of, put their head in the sand and kind of just want to pretend like it's not happening. If you do that, and especially if you're getting audited, they're going to make a determination you're going to owe. What I would tell you is, the reality is, and I'm biased, but it's the truth, you need to get a tax professional involved, get a tax attorney involved so they can help you, discuss this with the IRS and negotiate with the IRS to provide the paperwork that they need to make a proper determination, because the IRS isn't always right. They audit you, but they're not always right. So you want to make sure that if they're not right, you find out why they're not right and you provide the documentation that they need to make it right.
As we are doing this podcast, there's a lot of turmoil going on in our government. The IRS has cut drastically on their employees, some of their procedures. What impact do you see the layoffs and dissolution in many respects, departments of government, do you see having this, first of all, in your practice, and second of all, on people with regard to having problems with the IRS and debts?
Yeah. As we know, DOGE is taking a big bite out of the IRS. I think they're doing a lot of good things. I think they're, making things more efficient. They're going to be cutting waste. That's all good. The problem is, and I think it'll be good for the long term. The problem is they're cutting out, 40% or whatever it is of the people that work in the IRS. So DOGE may have a bunch of good ideas about efficiency and making things, less wasteful. And I believe they will. But you can't cut out the people who work there, who know, what's going on before these things are in place, certainly. So for the next year, at least, it's going to be very difficult for everyday taxpayers to really get anything done with the IRS. Now, for me, I actually think it's going to be good for my business. Because taxpayers aren't going to be able to get anything done, they're not going to be able to get in touch with anyone, they're going to have a difficult time with the people that even they are in touch with, they're going to need professionals to help them get through this. So for me, it's going to be good for my business. That said, it doesn't make me happy, because at the end of the day, my allegiance is with the American taxpayers. I want the American taxpayers to get the best service possible and get the most favorable outcomes possible. And if it's going to be difficult for them, that's not a good thing.
Have you personally seen any more difficult as far as reaching people at the IRS or communicating now?
I haven't seen anything thus far. I know there's been some articles out there, people saying that. I haven't had any problem whatsoever. In terms of even this tax season, refunds are going out actually a higher rate than last year. Returns are being processed at the same rate. So, a lot of these people, the people who are resigning or taking the resignation package will probably happen after April 15th. And so, there'll be more issues with compliance and tax debt and controversy issues. But the tax season has been fine. And even in terms of compliance and tax debt, I haven't found any issues. Now, I will say, I take that back a little bit. When I'm dealing with a revenue officer with the bigger cases, with higher balances and more complex issues, there have been a good chunk of revenue officers that have been laid off or took a resignation package. And so it has been more difficult to deal with them.
Stephen, let's say I have a tax problem. How do I contact you?
Well, you can go to weisberg.tax, which is the best way to contact me personally. It's weisberg.tax. That's my personal page. You can get in contact with me directly there. I'm the principal and founder of the W Tax Group, so you can always go to our website, wtaxattorney.com. And I'm very active on LinkedIn as well. You can really learn a lot about me and my practice if you go to my LinkedIn page. You can always contact me there. You can just give me a call, 248-971-0885. Pretty easy. I'm available. I like to talk to people. I like to talk people through what's going on with them. I know it's an anxiety-provoking time. So I do like, one-on-one discussions, even if I'm just talking you through something.
Let's say I contact you. What are the questions that you will be asking me?
Yeah, well, so I mentioned before about these kind of bad actors out there. They basically say, give me money and I'll figure it out for you. That's not the right way to do it because they don't know anything about your case. I'm going to set up an investigation, a tax debt analysis with you, where we're going to go over and I'm going to do an investigation to find out how much you owe, what years you owe, what penalties and interest you have, what years you still need to file. You may have a vague idea of what that is, but we want to know for sure. And then we're going to discuss, your finances. We're going to talk about, your finances and your, the investigation into what you owe and what your compliance issues are. We're going to take all that together, and then we're going to discuss what we can do for you. I like to be on the same page as my clients. I want full transparency. So that's why I don't like just hand me money and we'll figure it out. I want you to know exactly where you stand, and I want to know where you stand so I can know how I can help you. But we're going to be talking about years owed, how much owed, penalties, interest, years that need to be filed, your finances, income, expenses, assets, so I can give you good advice about how we're going to move forward. And then if you want me to handle your case and resolve your issues, we'll move forward from there. But we need to be on the same page at the beginning and both understand where you are.
Stephen Weisberg, before we sign off, are there any final thoughts that you'd like to share with our viewers?
My final thought is I've already harped on this a lot. Don't trust the commercials you hear on the radio or late at night. They're doing a very bad job. They're doing a bad thing, I should say. They're telling people something that they want to hear. They're giving them false hope. Find an attorney or a CPA that or get a referral from somebody. You can always call me or contact me. But if you're out of, and I can work all across the country. That said, at least get a referral from somebody. That's the best way to do it. Don't rely on the commercials. That's my bottom line.
Stephen Weisberg, I want to thank you so much for being our guest on Gracefully Greying today. I want to thank our viewers for watching Gracefully Greying, and of course, I want to thank our sponsors. Again, this is an important show, especially as we are dealing with taxes, and it's something that we all have to face. Thank you so much.
Thank you. Thanks, Henry. Appreciate it.